I do want to kick it off with you and J.CREW specifically. Are investors starting to lose kind of faith in the retailer because they were good, they weren't good, then Mickey Drexler came back? So where are we?
Yeah, so just 21 months ago, we were talking about an IPO for J.CREW. They're owned by private equity. And, now we're talking about their bonds are trading at 25 cents. So it does seem that traders are really losing faith that Mickey Drexler is going to turn things around. I mean, they were so hot in 2013. The first family was wearing them to the inauguration. And since then, things have really fallen off. I mean, we heard about the IPO potential. And then all of a sudden they didn't have the right clothes in stores. Their sales dropped off. So it's really up to Mickey now to get back to basics to try to improve sales, improve profit margins, and eventually get the private equity firm an exit.
Lindsay, is it as easy as it's just bad merchandising choices? We know consumers are fickle. I'm pretty fickle when I go shopping. I mean, is it as simple as that, or is there something more intrinsic in terms of what's wrong with J.CREW right now?
Well, Mickey did say, he said in conference calls, he's been very transparent that they made mistakes. The J.CREW brand, they brought in, too many fashion-forward pieces, and they got rid of too many of their basics. So you couldn't go in there and get a pair of ballet flats, but, you could go in there and get a great statement piece. Well, that's not what their shoppers wanted. So that's a big problem for them. Their pricing was too high for the quality of the clothes that they were selling. That was another problem. But the bigger problem is a retail-wide issue, and that's that customers aren't very loyal anymore. They can shop wherever they want, whenever they want, via the internet. And if they don't like what J.CREW has, they'll go somewhere else.
I want to bring in Shelly Banjo of our Gadfly section here at Bloomberg. I mean, Shelly, one of the things we keep hearing from retailers, it's a tough sector and you have to have the right merchandise. But a lot of them, especially with those with the international exposure, have been fighting the stronger dollar.
Currency is a big headwind big problem for these retailers this year. You've heard it at Macy's, you've heard it at Gap, you've kind of heard it all over, especially this week with Tiffany. Tiffany came down hard and said, this really has been really hard for Tiffany. They only have 50% of their sales in the U.S.
So it's a real concern, because I think we all make a joke about when retailers say we didn't make our numbers because of the weather. But I mean, a stronger dollar has a big impact.
Sure, it impacts retailers in three ways. The first way is just the translation cost. The second way is it gets more expensive for people outside of the U.S. And then foreign tourists, people who come over here, people make whole vacations out of coming to New York City, as you can see on Fifth Avenue or Madison Avenue, to go shopping, and they're just not shopping.
Hey, Lindsay, I want to bring you back into this conversation. I mean, what about the stronger dollar? Is that a big deal for J.CREW, or is that not something that they're having to deal with?
It's not something that J.CREW has called out. I don't think that they're a big tourist destination, but they have started to expand overseas. So they just opened their first store in Paris earlier this year. They have talked about expanding more in Europe. They're in the UK. They're in Hong Kong. So it's not easy. But for retailers like Macy's, for instance, where you are a big tourist destination at Bloomingdale's and at some of your bigger Macy's stores, it is a real issue. I mean, those are real dollars that you're not bringing in.
So, Shelly, you mentioned some of the retailers that we kind of have to watch out for. I mean, with the Fed, with the prospect of them starting to raise rates, this is going to become maybe potentially a bigger problem, because we're going to see the dollar potentially rise as rates go up.
I certainly think this is going to be a long-term issue, and it's not going to go away anytime soon. The retailers will lap all of this in the coming quarters, and so those comparable sales are going to get easier, but it's certainly going to continue to be something that these retailers have to manage and watch for.
And something for investors to keep a watch on.